Okay, we have come to the end of May. Time is flying. Can you believe it? And when you look at the performance in a month that is known on average for being a weaker one, you might have thought coming into May that it could be a tough month overall just because of the trade uncertainty. But here we are, looking at least with the S&P 500, poised to enjoy its best May despite the weakness early today since 1990. Now, to get to this point took a lot of topsy-turvy trading. Some of you might have seen the term taco trade making the rounds on Wall Street, a reference to the back and forth on tariff talk coming out of the White House. Where does this all leave us heading into June and the months ahead? Let's ask Mike O'Rourke. He's Chief Market Strategist at JonesTrading. Mike, it's great to see you, as always. How would you define what happened in May? Is it that we saw worries that ultimately did not turn into the worst-case scenario and investors felt like piling back into stocks?
Well, I think, what you summarized there kind of hits the nail on the head in the sense of we've had these large tariffs administered by the Trump administration against foreign countries. But then we've also seen the Trump administration's pretty quickly back off from those tariffs or lower them. And obviously the moves down created by the tariffs. And then as the Trump administration reverses course, we wind up seeing big rallies in equities. But of course, we probably are still going to see additional volatility and more tariff headlines.
So I feel like this is when strategists like yourself really earn your money because, we had a lot of risk on related stocks, a lot of the technology companies that were the easy ones for investors to sell when they got nervous, rallying in a big way off their lows. And nobody likes to miss those rallies. But we're not out of the tariff woods per se. I mean, I think even when I look at Canada's economy and the worries about where we're going, a lot of people are concerned that we're already going to feel some of the tariff sting, and even U.S. businesses will as well. And what will that mean for earnings, et cetera? So after the rally in May, what do you think is going to be happening in the stock market as we roll through the summer?
So, I mean, that's the problem we saw yesterday. We saw weaker economic data. We saw the personal consumption component of Q1 GDP revised from 1.7% to 1.2%. We saw an uptick in initial jobs claims, while they're still at a relatively healthy level. If that continues, it will be a concern. So the concern going forward is, do the tariffs, do the uncertainty, do the volatility come and filter through to the economy, which it feels like we may be seeing the early signs of that. From my perspective, I would be avoiding the S&P 500 because that has been trading with a lot of volatility due to those mega cap Mag 7 names. I prefer the S&P 500 equal weight, which is at probably a 25-30% discount from a multiple basis in valuation there, or even the small and mid cap names, especially small caps. They've really corrected significantly and are pricing in a good deal of risk already. So if the tariff problems do get resolved, they have significant upside. But if we still see uncertainty going forward, those groups are already priced in a good degree of risk.
All right, as you were talking, I was trying to pull up kind of the sector breakdown for the equal weight. Don't have that right at my fingertips, but it makes me wonder, when you think about a market like Canada, the TSX, as you know, tech stocks, while enjoying a nice May, like Shopify, make up a smaller percentage of the index. I mean, banks, certainly the materials stocks, the energy stocks, they have a larger composition within the Canadian benchmark index, which, by the way, has been trading around record highs. So it's getting away from tech and maybe having exposure in some of the other areas that you like more.
Well, I just think it's not even necessarily tech, but that is a big part of the weight, the tech and communications names in the S&P 500. So they drive a lot of volatility. I mean, NVIDIA is a phenomenal company, but its shares have, have rallied 64% in the past 6 weeks or so. That type of volatility for a mega cap company, I think is just too much to be comfortable with, and I think you just want to be a little more spread out. The pharmaceutical space is a good example. Outside of Novo Nordisk and Eli Lilly, because they're the big GLP-1 diet drug manufacturers. A lot of names are attractive in that space, bringing down the valuation for the group. But of course, you do have to deal with the potential volatility of the Trump administration, trying to force use favored nation trading status to lower pharmaceutical prices. So I think the point I'm trying to make is you have to look around to see what's already priced in the risk out there of the policies the Trump administration is looking at. Energy is interesting because energy, it's been under pressure. Obviously, we're trying to ramp up oil production and obviously bring down inflation with the help of bringing down oil prices. But again, those risks are starting to be baked into energy stocks. The other place up in Canada that's going to is getting a lot of attention, of course, is the materials names, especially uranium, with the big push for nuclear energy, especially here in the United States with AI. So there's a lot of interesting things going on out there when you can get beyond the Magnificent Seven and those big mega cap stocks.
Yep. Great perspective. Mike, thanks very much. Good to see you. Mike O'Rourke of JonesTrading. We're going to take a quick break. We were